Yo, what's up everybody? Monday, November 8th. Hope you had a great weekend. I hope everybody had a great weekend. Still want to thank everybody for all the kind words and encouragement you sent me. I'm feeling good. Feeling good. Thank you very much. So, folks, a few more weeks. You got a few more weeks left in November to sign up to MMT Trader before the price goes up December 1st. Told you about that. The new issue is out today. If you want to get that, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial. Do it now. You got to do it now. Now while you have the chance. Look, everything I'm looking at right now looks really, really good. I don't see any problems in the immediate future, with the exception of we're coming up to December 3rd. That would be the end of the continuing resolution. We're going to get back into all this bullshit again with are we going to get government funding? Are we going to get a shutdown? We get the debt ceiling. Right now, fiscal flows are really strong. I mean, we're looking at almost $600 billion a month in flows. That's like way above what my expectation was. I mean, we're running at about 29 billion average. That's the 10-day average of daily flows, 29 billion. So multiply that by 20, that's 30 times 20, that's like 600 billion. That's strong. That's really strong. Let's talk a little bit about the taper, which I find, hang on a second, I find that the taper was kind of funny because, you know, as I said in a prior video, when the Fed did that, you saw the reaction, you saw the zombie reaction. They were like, oh my God, you gotta sell. They sold the gold, right? That gave an incredible opportunity to buy in. You see where gold prices are right now. Folks, the thing that people don't understand about gold, and I'm not a gold bug, and I'm not one of these people who have, you know, view gold as money. It's a commodity. It's an industrial commodity. It is a growth play. When you do taper, to reiterate for the millionth time, as I've already explained, when the Fed leaves those assets in the economy, that is equivalent to a fiscal expansion. That money via the interest rate channel, the government pays interest on securities, that goes into the economy. That is not stripped out and held by the Fed. So that goes into the economy, and that is like, it is. It's not like, it is a fiscal boost, and that is positive. So it's normal to see metals react positively. It's normal to see risk assets react positively. It's normal to see commodities react positively. Speaking of commodities, I want to mention that oil, I think I said last week or the prior week, we saw producers for the first time get short crude oil futures. That was the first time in 10 weeks. They had been long. And we did see inventory builds. We had 5 weeks out of the last 6 of inventory builds. But guess what? They flipped back to long. I mean, they're not long by a large amount, but they flipped back to a long position. So whatever they see, I guess they see a bullish outlook, at least in the short term. The last time they flipped that position around, we got that spike up all the way to $86 or $87 a barrel. So that's something to pay attention to. The other thing I think I mentioned, and I think this is pretty interesting because nobody's talking about this, but what else is new, because this is the stuff that I bring you. Commercial and industrial loans starting to go up. Second week in a row that they're up. They're at the highest level now, I believe, in 4 weeks. Why is this important? Because commercial and industrial loans typically are used by firms to finance inventory. And we have seen, like for the last 20 months in a row, during the pandemic, during all this supply chain disruption and everything, a collapse in commercial and industrial loans. Not because the banks didn't want to lend, basically because businesses and companies they had no inventory, and there was no way for them to get a hold of inventory because of everything that was happening with supply chain and the pandemic and everything else like that. I think it's a really good sign that we're starting to see these loans pick up again, because it could be an indication that some of this supply chain stuff that we're dealing with, these disruptions, are starting to dissipate. We're starting to see some inventory financing coming back in. And what does that mean? It means more supply. If you get more supply, what happens to the price? The price goes down. What happens to everybody screaming about inflation? They're going to be wrong. That's right, they're going to be wrong. We also see Treasury yields coming down. I told you they were going to come down. It had nothing to do with the Fed taper. As long as the Fed is not telling us, hey, we're going to raise interest rates, which they're not saying, then there's very little risk that we're going to see any kind of a sustained rise in rates. I mean, the whole rise that we have seen since what, March or April, that was built on this inflation hysteria. And it's not just hysteria, I understand that. We have seen some significant price rises, but that was transitory. They're right when they're telling you it was transitory. We're starting to see things such as what I just mentioned with inventory financing. By the way, China just reported record exports. What does that mean, folks? It means global growth is still pretty strong. Exports flowing out of China, more supply coming into the global economy. All good. It's all good. So, you got good fiscal, okay? You got good monetary conditions. You got inflation pressures starting to abate, starting to calm down. All right, and you're not going to see interest rates flying through the roof. The only thing we got to really worry about are these clowns in Washington by December 3rd. It's going to be the holiday season. Hopefully they'll get this shit done. They got to get it done. They usually do. You know, they hem and haw and they go make their, their kabuki theater and everything that they got to do. But eventually they get it done. So it's all looking good. It's looking good. You got to buy the dips. Market is strong. One last thing I'll say, institutional asset managers, I mean, they got a really low, long commitment to the market right now. It's kind of weird. It's kind of strange. Like, you would think with the market this high, you would see these guys like so overloaded, but they're not. So they got to get in, and they're going to get in. Anyway, I'm feeling good, folks. Thanks for all your great messages and your emails and your encouragement. I love you all. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader while you still have a chance before the price goes up. See you tomorrow. Bye.